Hello, thank you for joining us at our YouTube page today. This is Luke McCarty. I'm the certified financial planner at McPherson Financial Group, and I'm going to dive into the Inflation Reduction Act and let you know the pros, the cons, what's going on behind it. It's a lot of pages, but I broke it down, and so here we go. So the overview is spend money to raise money. So there's going to be 433 billion in new spending, with the expectation to raise about 740 billion. Now, we won't know if these new taxes and new IRS agents, are going to come up with the 740 billion because it's a 10-year plan. So a lot of times when the government has a 10-year plan of raising money to offset things, they just tend to increase the deficit. So we'll see how this one plays out. But most of this bill is going to renewable energy spending. So about 370 billion going to renewable energy investments with the goal to reduce carbon emissions by 40%. The way that's being funded is spending more money on the IRS. So there's going to be about 3 billion to taxpayer services. Now, I do agree with this one because I would like to be able to talk to someone on the phone with the IRS. I'm sure Mark Bernard, our CPA, would like to have faster response. If you file an amended tax return, it's still paper. You have to mail it in. The IRS is way behind. I wish they would spend more of this money on technology. I think that could reduce the number of agents needed. But then they're going for $45 billion of spending for enforcement. And that comes with hiring of about 87,000 new agents. So I heard a good stat. I guess it's not a good stat, but the IRS will have more employees than the Pentagon, FBI, and Border Patrol combined. So I believe if this is true, it feels like an overreach. I think they could solve things a little bit better, with more service, more technology. There shouldn't be a need anymore in this day and age to mail anything in, right? Everything could be electronic, but they're behind the ball there, and they're going to fight it with more enforcement, I guess. So we'll see how that ends up. I also saw something where currently, the percentage of citizens being audited is about 1%. This may push it up to 3 to 5%. So still not a lot of people getting audited, still low odds of an audit, but going from 1% to 3 or 4%, that's a big number. So they are going to enforce and find some money because they need to pay for all these renewable energy investments. They're also coming back with a new taxation on corporations. So a 1% tax on all corporate share buybacks. So historically, companies have been buying back their stock, which is good for the price of the stock. So instead of maybe issuing a dividend or increasing a dividend, they may do share buybacks, which helps increase the price of the stock by adding more demand. So there's going to be a 1% tax on that, and a minimum of 15% corporate tax on any company with 1 billion in revenue. So if you ever had the AMT tax calculation done on yourself, on your personal return, the alternative minimum tax, it's going to be the same, but in regards to corporations. So the IRS is no longer going to allow corporations to, overdo a research and development credit or, have too much spending or too much write-off, because if you do, you'll still fall into that 15% tax. Now, we'll see how this impacts us individually, but more often than not, when you raise, taxes on corporations, they just tend to raise their prices to pay for it. So hopefully that's not the case, but we'll see how this works over time. This is estimated to raise about $125 billion over the next 10 years. So tax credits. So some things that could impact us individually, right? There's a potential for a $4,000 tax credit for a used electric vehicle and $7,500 for a new electric vehicle. The income limitations on the new vehicle is $300,000 for joint or $150,000 for single. So if you're over those thresholds on your tax return, you don't get the credit. And there's also no credit for the truck or an SUV if the price is over $80,000. And then sedans or cars are over $50,000. So some, if not all, right, Teslas may be priced out. I know there's some, on cheaper version, but they're creeping up and they keep raising prices with everything else. So, if they really are going to offer these tax credits, it's going to be, in my mind, difficult to find a good electric vehicle under 50,000, which has kind of been the complaint this year when you talk about gas prices. Well, just buy an electric vehicle. That's fine if you can afford it, but over 50,000, that's kind of where Teslas seem to be sitting right now. And on the used vehicle credit, it's the 4,000 or 30% of sales price, and that income cap is even lower. So for joint 150,000, or for single it's 75,000. So it feels as if you get a bigger credit for a new vehicle, you could make more money and still get the credit buying a new vehicle. So this is really going to push new electric vehicles, which right now Tesla seems to be the only one mass producing them, and with the ability in the near future to continually mass produce. Some other credits are on the clean energy side. There are a lot of credits in this bill. It's hundreds of pages, but it's not to exceed $1,200 for upgrades with windows and doors. There's $2,000 for heat pumps, heaters, $600 for energy property. I put those in quotations because that's what it says. $600 windows, skylights. And, there's some new Energy Star construction program where you can get $2,500 to $5,000 credit for a new energy efficient home. Some other changes are going to be to Medicare and healthcare. So these changes are going to allow Medicare to negotiate for prescription drug prices with the intention of lowering drug prices. It's going to extend the Affordable Care Act program for 3 more years, and it will eventually cap the out-of-pocket cost of prescription drugs for Medicare at $2,000 through Part D. Here's a good illustration of the timeline of the prescription drug provisions. So Medicare Part D, so you can see in 2023, it requires companies to pay rebates. 2024, it eliminates the 5% coinsurance, and then 2025, it adds the $2,000 out of pocket, and then the negotiations start. And there's certain drugs, right, 10 to 20 over the next, from 26 to 29. And also, if you look at the very bottom here, it limits Part D premium growth to no more than 6% per year. So as we're seeing record inflation, right? This month we came in at 8.5% inflation. They're saying that this Part D cannot go up by more than 6%. If you're on Social Security and you remember this last year, your cost of living adjustment was pretty good, but Medicare premiums went up, Part D premiums went up, everything went up with it. So this will limit that to, up to that 6% per year. And some of the other good news, other than, the Medicare prescriptions cost and some of the electric vehicle credits, there's been no increase to the top income tax bracket. That's still 37%. There was no increase to the long-term capital gains bracket. The top bracket there's 20%. And there's been no reduction in the state gift tax exemption. It's still $12 million per person at your passing to not pay a state tax. And you can still give away $16,000 a year per person to any individual without filing a gift tax return. And my favorite here was the backdoor Roth survives. So this administration is the first one to consider repealing the backdoor Roth. And, there's a lot of talk about rising taxes, capital gains tax, exemptions, estate tax. That's not included in here. So that's good news for now. And, we'll see if, the corporate tax, the alternative minimum tax on corporations of 15%, plus the 1% in buyback tax, plus the billions being spent on the IRS, will have enough money to cover all of the expenses. But, in my opinion, it's probably going to, be a deficit, right? As in most spending bills are. It's unfortunate this is called the Inflation Reduction Act, because it doesn't feel like that's the purpose. It feels like the purpose here is more, green energy, solar and wind, but, it is what it is. So thanks for joining. Let me know if you have any questions. Once again, I'm Luke McCarty. Call us, email us. If you click subscribe on our YouTube channel, you can receive all of our updates immediately through YouTube.